So this morning I bought the NASDAQ and I want to go over the trade as well as talk about kind of where I'm at in terms of trading setups right now, as well as my expectations for tomorrow's big Fed meeting. It should be an interesting remainder of this week. First, let's start with this NASDAQ trade. So NASDAQ, I picked it up long. It broke out on the lower time frames. The broker I'm trading with, by the way, it is Webull, and there's a link down below in the description. If you'd like to sign up, you get free shares when you do so. Again, the link will be in the description. So we had this level of resistance. I've got it marked in this gray zone. And this morning, price pops open and stays strong for a period of time. And then we proceed to see two really strong long wicks here off of this zone. So after that closes, I basically waited for a little bit of a retracement and picked up the NASDAQ on the long side. The market opens up and we explode to the upside. So we very clearly here respected this area of support. What's my plan for this trade, especially with Fed meeting around the corner? Well, let's talk about it. So again, I've got the trade open and we at one point were floating about 1.5 R, meaning my risk was 1. My total reward floating was 1.5, floating meaning currently still open. Well, my plan here for this trade is I'm not going to move my stop loss until we get a bit further of a breakout on the NASDAQ. So I've got this level here I want to show you guys as well. For those of you who are watching the NASDAQ with me here today, I'm looking to see if we can break above this previous high. And if that does happen, any breakout and close above, I'll go ahead and start trailing my stop loss to any higher lows. If this happens, now I will say there is the possibility by the time you guys see this video, it takes time for the editor to work through it and get it up on YouTube.
So how long is this going to take?
You can't rush art.
This thing could have come all the way back and closed me out for a loss. The point though is that it will be a small loss on this account. It won't break the bank and I'll still have dry powder for tomorrow's Fed meeting. But if this thing does trail going higher ahead of the Fed meeting, my goal is to keep that stop on it, tighten it up as it goes, and plan accordingly. That's personally how I would break this down, and I hope that that game plan is helpful to perhaps somebody who is also watching this chart or one of the other charts that we may discuss in this video. So that is a current trade. I did share this inside of our Discord channel, and I want to invite everybody who is watching here right now, make sure to come join our Discord channel if you have not already. Here's two things for you to consider. Number one, we have a free Discord channel available down below in the description. If you want the free version, you'll get access to analysis, video updates, and some free PDFs that might be helpful to you. But at the same time, if you'd like to sign up for the VIP, you'll get access to the trades that I'm being shared sent directly to your phone. Obviously, you can see commentary in these videos each day, but if you'd like to get the notifications sent to your phone or desktop, sign up for the VIP. There will also be a link for information. If you'd like more information about the VIP, at the top of this description, there will be a place where you can send a direct message to my team. We want to connect with you before tomorrow. Tomorrow is a really big day. So if you'd like to meet someone on my staff and ask about memberships, we do have a discount available as well. Just message us using the link at the top of the description. So what else? What are we watching for tomorrow's big day? Well, again, here's just ahead of the time. Today is Tuesday, but tomorrow is the big day. We have 2 p.m. The Fed meeting is set to come out. Okay, during this Fed meeting, expectations are a rate hike of 25 basis points to 5.5%. This is likely going to happen, almost certainly, right? The whole market is expecting a 25 basis point rate hike. This is what everybody thinks is going to happen. So there will be no surprise if that does happen. Where the surprises will happen, where the volatility will occur for those of you guys who are watching USD pairs, indices, or gold, is these two components right here. That would be the statement that the Fed puts out, which could perhaps give us some clues of where their next rate hike or pause could come into play. Any clues on whether or not another hike or a pause is coming will give huge volatility to the markets. And the other side is this 2:30 press conference where I believe it's Jerome Powell going to be answering questions from people in the audience. And that will, of course, cause some volatility because anything he says could cause some clues to be given about where the Fed's head is at, right? So that's what we should probably be paying attention to. I also want to take a quick look at COT data ahead of the Fed meeting. This can be useful information. So we're taking a look at the COT reports and we can see gold. Hedge funds are still very long gold, but they're also pretty long things like USD, GBP, silver, oil, etc. Where things are a little bit more 50-50, get my trade, which is the NASDAQ. So hedge funds are about 50-50 on the NASDAQ. They're not so optimistic on things like the S&P, and the Dow is a little bit bearish as well, but they're very bearish on yen. So these are things that just you should know. This is where hedge funds are kind of generally positioned right now for your awareness. And again, we can also take a look at where retail is positioned ahead of the news as well. Right now, retail traders are very much long the dollar, it seems like, against the Swiss franc. And we could also flip things around to the other side. We could say, well, they're very short dollar yen. Well, 57%, that's not too crazy. And about 50-50 on the euro. So actually not a lot of extremities here, at least in the major currency pairs. Let's take a look now at perhaps the indices. This is interesting. Retail traders are very short the indices right now. Almost, so we have 82%, 80, 72. So these three are the most shorted by retail traders. Very interesting. The Dow, the S&P. So we see retail traders piling short. What does that tell you? Well, for me, this is a contrarian indicator. If we see retail traders very short, I'm more interested on the long side, and vice versa. So if we take a look at the top, again, on indices, it's pretty much very bearish sentiment from retail. And if we take a look finally at commodities, this is going to give us our gold and oil perspective. You can see oil, oh, our gold is missing. Probably some maintenance on that, but I just happen to know right now. Usually what happens, guys, is that when it comes to positioning, if retail traders, if a trend is moving higher, so we could take a quick look at gold here. If gold is moving lower, typically retail traders are buying it. And if the market's moving higher, retail traders are typically shorting it. So that's usually a way to predict what retail sentiment is going to be. It's a very recurring pattern or concept. Anyways, let's take a look at what else we can find in terms of where things are at. This is the central bank forecast for the remainder of this week with the Fed meeting coming. If we take a look at, like, for example, the dollar, I want to make this point, which is very, very important, I think. Price action wise, as well as projections wise, I want to take a look at the USD. So here's the dollar, right? Expectations are for another rate hike. There's speculation as to whether or not there will be 2 more rate hikes or just 1. That is, my friends, where the volatility comes in. When there are, it's kind of like, if you think about it, whenever there's a political conversation or a topic that is highly controversial, that's where volatility in conversations explode. People aren't usually going to get mad about, well, I guess it is 2023. People get mad about everything. But let's just say, like, a loaf of bread. People aren't going to get mad about a loaf of bread, right? Oh, no! No! I don't know. We live in a crazy world. But people certainly get very angry about things like politics and all sorts of stuff. Same thing with market news. If market news is highly controversial and volatile, volatility comes from unexpected twists and changes and commentary, that is where things get very interesting in the markets. So anyways, long story short, there's expectations for rate hikes and there's also expectations for rate pauses. And that will be where the volatility is, because there will be a winner there, right? So if they decide to rate hike this time, but next time they pause, dollar bears are probably going to be the winner. If they rate hike, but then they make clues and they rate hike again in the next meeting, that's where the dollar bulls would come in and they'd probably be the winner. So again, that's where we kind of get some interesting stuff there. Speaking of the dollar, I wanted to load all that up just to say, in terms of a technical perspective, the dollar broke out of key resistance here at the 38.2%. I think that the dollar has short-term potential to continue squeezing up to this 61.8% retracement. And unless something very surprising comes out of the Fed meeting tomorrow, I would expect that this could result in perhaps a rollover effect where dollar bears are still overall in control as inflation projections still come down. Let's go back to that central bank forecast and I'll show you guys something with the inflation-specific data. Inflation in the United States, as for most places, is expected to continue coming down. Okay, so taking a look at the inflation forecast, what we see here is that inflation is expected to continue cooling. If this does stay the course, likely the USD will also become weaker. And for newer traders or fundamentalists, people who know not so much about fundamentals but are trying to learn here, quick breakdown is inflation cooling will mean that the Fed interest rates, which we can see on this side of the screen now, interest rate projections follow very heavily what inflation is doing. If inflation is cooling, the Fed may need to raise rates less or even cut rates at some point. Rate cuts cause huge decline in the US dollar, while high levels of inflation cause expectations for rate hikes to go up. If this is confusing to you, let's try and keep it simple. This can be a confusing topic, so I understand. If prices are rising rapidly, the Fed may need to slow down the economy to stop that from becoming a out of control problem. They need to raise rates to make business expenses more costly to run and basically make borrowing money harder to do. That's a way to slow down the economy. If inflation projections are actually doing well, meaning they're coming down, they're cooling off from really high levels, it is likely that the Fed will no longer need to rate hike like that in order to do so. So conditions start to become better for businesses. There's a lot here to this. And again, a lot of traders, they'll just write off fundamentals as, oh, that's too hard, let me just stick to technicals. But I really do think that if you understand the fundamental story, you can find the bigger trends that are occurring in the markets and take advantage of them. So that's why we pay attention heavily on the channel. Speaking of some more currencies, we talked about the dollar here. Today I had Tom on the show who talked a little bit about some euro dollar ideas as well as pound dollar ideas. So we'll go to Tom real quick and see what he had to say on the stream. Check it out.
You know, there's a lot of talk about the US dollar pairs, and I just want to, concur with Frank. There's a really nice level on the euro US dollar at the moment. If we sort of bring this down a little bit, there's an area here that I really like for euro US dollar. You know, we've got, not only have we got a horizontal level, but we've also got the moving average 20, which I use as dynamic support. So in terms of a level, I really like it in terms of, taking buys back up to here. But it's not a trade for me today, because if you look at this candle, I just cannot buy a candle that looks like that. It's not a trade for me today. Depending on what this candle does, today's candle, it might be a trade tomorrow. So let's see. But then you also have to bear in mind, we've got the Fed tomorrow. So, we may have to wait a couple of days before we get a trade here. But just in terms of a level, I really like this level. And it's the same for the pound US dollar. Here we are. So pound US dollar, very similar scenario. We're clearly in an uptrend. We've retraced to a really nice area of value. And when I talk about value, we just got so much room for this trade to move into. And again, we got the moving average 20 as dynamic support. And we've got this level through here, that is horizontal support. So, really like a couple of these setups, but, we've got the Fed coming out tomorrow. It's difficult to commit to them at the moment. I'm looking at those two.
If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.